Welcome back to Canada Pension Hub, where we explain important retirement programs, benefits, and financial information for Canadian seniors in a simple and easy-to-understand way. Today, we are talking about property tax relief programs that may help eligible senior homeowners across Canada. If you are 65 or older and own your home, it is worth understanding what options may be available in your province or municipality. This is not about avoiding taxes or receiving money without conditions. These are government programs created to help eligible homeowners manage the financial pressure that can come with rising property costs, especially during retirement. For many seniors, owning a home is a lifelong achievement. They may have spent decades paying their mortgage, maintaining their property, and building a life in the same community. However, owning a home does not always mean having enough available income for every expense. Property taxes are one of those costs that continue year after year. They do not stop when someone retires, and they can become harder to manage when income is fixed. Many seniors face a difficult situation where their home has significant value, but their monthly income is limited. They may have enough wealth in their property, but not enough cash flow for increasing bills, groceries, medication, heating, and other everyday expenses. This is why different levels of government across Canada offer programs that may provide property tax assistance. One option available in some provinces is a property tax deferral program. A property tax deferral allows eligible homeowners to delay paying some or all of their property taxes. Instead of paying the full amount immediately, the deferred amount is added as a loan secured against the home. This means the homeowner keeps more money available today for important needs while the payment is postponed until a later time. In most cases, repayment happens when the home is sold, ownership changes, or the estate is settled. The exact rules depend on the province and program. It is important to understand that a deferral is not free money. It is a financial option that creates an amount owing in the future. Before applying, homeowners should review the interest rate, repayment terms, and eligibility requirements carefully. British Columbia has one of the longest-running senior property tax deferral programs in Canada. Eligible homeowners may be able to postpone their property taxes through this program, helping them manage expenses while remaining in their homes. However, program rules and interest rates can change. Anyone using or considering a deferral should check the latest information through official provincial resources before making a decision. Alberta also offers a property tax deferral option for eligible senior homeowners. This type of program can help qualified individuals delay certain property tax payments through a government-supported loan arrangement. In Ontario, there is no single province-wide senior property tax deferral program. However, many municipalities provide their own forms of assistance. Some communities may offer tax deferrals, payment arrangements, or relief programs for seniors who meet specific requirements. Other provinces, including New Brunswick, Nova Scotia, and Prince Edward Island, also have programs that may assist eligible senior homeowners. Because every province and municipality has different rules, the best step is to check directly with your local government office. Another type of assistance is property tax grants, rebates, and credits. Unlike a deferral, these programs generally reduce the amount you owe instead of creating a future repayment obligation. Some provinces provide homeowner grants that lower property taxes for eligible residents. Seniors may receive additional benefits depending on their age and circumstances. These programs can make a meaningful difference, but many people miss them because they do not know they exist or assume they will not qualify. Eligibility rules can vary. Some programs consider factors such as age, income, residency, and whether the home is your main residence. For example, some seniors may qualify for tax credits through their provincial income tax return. These credits can help reduce the overall financial burden related to owning a home. If you prepare your own taxes, it is important to check whether your province offers senior-related property tax benefits. If someone else prepares your taxes, ask them directly if you are claiming all available credits. Another area many homeowners overlook is municipal assistance. Your city or town may have additional programs that are separate from provincial benefits. These may include senior rebates, low-income assistance programs, flexible payment options, or other local forms of relief. Municipal programs are often not widely advertised, which means eligible seniors may never hear about them unless they ask. A simple phone call to your local tax office can help you understand what support may be available. You can ask a simple question. I am a senior homeowner. Are there any property tax relief programs or payment options available in my municipality? Taking a few minutes to ask could help you discover programs you may qualify for. There are also federal programs that can help seniors maintain their homes, although they do not directly reduce property taxes. For example, some federal tax credits support eligible home improvements that make a home safer and more accessible. Changes such as accessibility upgrades, safety improvements, or modifications that help seniors remain independent may qualify under certain programs. The goal of these programs is to support seniors who want to continue living safely in their own homes. Now, let's discuss some common mistakes homeowners make. The first mistake is assuming they do not qualify. Many seniors believe assistance programs are only for people with extremely low incomes. That is not always true. Some programs are available to a wider group of homeowners. The second mistake is forgetting deadlines or yearly requirements. Some programs require applications, renewals, or tax claims each year. Missing a deadline could mean missing out on available assistance. The third mistake is checking only provincial programs and ignoring local options. Your municipality may have additional support that you will not find through provincial websites. The fourth mistake is not understanding the details of a deferral program. Interest rates and rules can change over time, so it is important to review current information instead of relying only on older advice. The fifth mistake is not asking questions. Government programs can sometimes seem confusing, but asking your local tax office, a trusted family member, or a qualified financial professional can help you make an informed decision. Here are some practical steps you can take. First, look up your province's official information about senior property tax programs. Second, contact your municipal tax office and ask what local assistance is available. Third, review your tax return to make sure you are claiming any eligible senior-related credits. Fourth, if considering a deferral program, understand the interest rate and repayment conditions before applying. Finally, keep track of application dates and renewal deadlines. These programs exist to provide support and help eligible seniors manage the cost of staying in their homes. If this information was useful, consider sharing it with a senior family member, friend, or neighbor who may benefit from knowing about these options. At Canada Pension Hub, our goal is to explain retirement-related information clearly so Canadians can better understand the programs available to them. Thank you for watching, and we'll see you in the next video.